Okay, let's take a look at exercise 12-3, which deals with classification issues with an intangible asset or intangible assets. Joni Hyde Incorporated has the following amounts included in the general ledger. Now, on Section 8, it says compute the total amount, or Section A, compute the total amount to be reported by Hyde for intangible assets on its balance sheet. So as we go through, let's see which ones are intangibles. The organization cost, no, you have to expense that now. That used to be considered an intangible, but the benefit is unknown, so now that's not. Now, the trademark definitely is an intangible, so we can include that. And that trademarks is equal to $15,000. All right, let's keep going. Discount on bonds payable? Nope, that's a contra bonds payable account. Deposit with an advertising agency? Well, that's a monetary amount that definitely has a future benefit to promote goodwill of the company. You might even consider that to be an expense incurred for ongoing business. But regardless of its consideration, that deposit is not considered to be an intangible. Just because it says it promotes goodwill, we only are allowed to recognize goodwill when we buy an entire business or line of business of many assets at the same time. All right, let's slide on down. Excessive cost over fair value of net identifiable assets of acquired subsidiary. Now that's goodwill. Rather than type that in, I've already have off to the side here. I'm going to just put that in right there, and that dollar amount is $75,000. Okay, and do we have anything else? Cost of equipment acquired for research and development. Well, that's a long-lived assets. Especially because it has an alternative future use, so that's not an intangible. Cost of developing a secret formula for a product that is expected to be marketed for at least 20 years. Well, I'd consider that to be research and development, at least until the formula can be proven and can be justified, in which case then it would be actually an inventory cost or a development cost that could be classified somewhere else. But at this point, it's not an intangible. So we've got the total intangibles. And it's just simply the sum of those two. So hit the auto sum, we get $90,000. Okay, B says, if an item is not to be included in tangible assets, explain its proper treatment for reporting purposes. Okay, let me drop in what we know. Organization costs were $24,000, that's from our first line, and that should be expensed. Discount on bonds payable should be reported as a contra account to bonds payable in the long-term liabilities section. Okay, let me slide a little bit. What else do we know? All right, let's talk about the deposits. Deposits with advertising agency. Promote the goodwill of the company would be reported either as an expense, which is what I thought, or as prepaid advertising, depending on the probable periods in which we think we'll have benefits as a result of that deposit. Let me slide down a little bit again. The cost of the equipment acquired is for R&D projects would be reported with property, plant, and equipment. And then the last item, the cost of developing a secret formula expected to be marketed for 20 years would be classified as research and development expense on the income statement. And that's what was required in this intangible exercise. Thanks, everyone.